All right. So thank you for coming. Today, first of all, I am Wendell Butler. I'm with Envoy Mortgage out of Medway, Massachusetts. I'm a VA loan specialist, and today I'm doing a presentation on helping our veterans and the families in their homes through the VA loan. Oh, someone's coming in, someone admit them. All right. All right, so let's get started. So again, my name is Wendell Butler. I work for Envoy Mortgage out of Medway, Massachusetts. I'm an Envoy certified VA loan originator, helped many veterans into their homes. Since 2010, Envoy has actually helped 8,500 veterans realize their dream of home ownership. It's actually grown even higher than that number. I think that's a little low compared to what it is today. These stats are kind of back from like 2019, so it's probably a lot higher. Envoy Mortgage is also ranked in the top 10% of lenders nationwide for VA loan originators. All right, so these next couple of slides are just going to go through each state that's kind of close to us and just the veteran population within them. So when we're looking at Connecticut, there's actually around 220,000 veterans within that state. And if you look at the United States as a whole, there's around 21.3 million veterans. It's just nice to see like how many veterans are with us and around us, and it's good to know as a statistic. So this is Connecticut. Massachusetts, as you can see, a lot of them are around the Boston area, which, I mean, most of the population of Massachusetts is around the Boston area. So it's good to know. And actually, Massachusetts has more veterans than Connecticut at 383,000, which is awesome. And then we have Rhode Island. Rhode Island, as a smaller state, has a less population, obviously, so has about 70 to 71,000 veterans. And I actually used to be stationed in Providence, Rhode Island, when I was a medical officer in the military as well. All right, so here's a few veteran statistics as well. So I went over this, but over 21 million veterans live in the United States. 53% of veterans are 55 years and older. 70% of veterans are married, and 69% do not have dependent children. Approximately 33% of veterans have served in a combat or war zone. More than 81% of active duty service members who have ever owned a home reported that they have used a VA home loan program. And more than 66% of all veterans who have ever owned a home reported using the VA loan program. I think that number, 66%, is actually a little low. I wish it was higher just because of all the benefits of the VA loan program. But when I was in the military, one of the factors that I realized is that the military doesn't do a great job of explaining the benefits and the opportunity of using the VA loan for the veterans. So it's good to have, realtors or loan originators that understand the VA loan to kind of communicate with the veterans of their options and the awesome benefit that they have. Here's a couple more statistics. So the loan type. So when people use the VA loan, 62% are using it for purchases, 38% are using it to refinance. As you know, with a VA loan, you don't have to put down any down payment. It can be 0%. So 82% of purchase loans are with no down payment, and 18% use a down payment. And then the veteran status of veterans that use the VA loan, 18% are active duty and 82% are veterans. All right, so why a VA loan? As I mentioned before, the VA loan has a great option of a 0% down payment. When you look at conventional loans, they typically require a down payment of around 5 to 20%. There are some government-sponsored programs that let you get as low as 3%, but they do have qualifications that some borrowers may not be able to use that if they don't fit in their qualifications. FHA loans require a minimum down payment of at least 3.5%. The VA loan has no mortgage insurance, so no PMI is what a lot of people call it. Conventional generally has a mortgage insurance for anything with a down payment less than 20%. And FHA generally has a mortgage insurance for the life of the loan. There are some instances where you can get it dropped off in 11 years. You put a certain percentage of down payment down, but more often than not, if you're using the FHA loan, you might be using the 3.5% down, which the PMI, the mortgage insurance will last the life of the loan until you either refinance or sell the home. The interest rates for VA loans are very competitive compared to conventional and FHA loans. It averages 0.25% lower than a similar FHA loan and averages 0.4% lower than a conventional loan. So that's just additional savings to veterans as well, on top of the no mortgage insurance. They are very flexible underwriting guidelines. So a lot of these, like FHA conventional and most loans, we have another person coming in, so I admit them. So a lot of these loans, like conventional and FHA programs, use different
so just wanted to make sure we got that out of the way. That what's happening in Europe will have, by all immediate indications, very little impact on the mortgage market or on.
There you go. Thank you, Kyle. All right. So like I was saying, so conventional FHA loans use DTI, so debt to income ratios, to qualify borrowers for the loan that they would like. What VA loan does is actually they use different type of guidelines. They use something called residual income. So what they do is look at the whole, the borrower as a whole and their family and just the total income from their household. And then they take into account different calculations to come up with a residual income left over that they have. And they use that to qualify for VA loans, which I'll go into later on in this PowerPoint. But what it does basically is it allows borrowers to qualify for much more compared to conventional loans and FHA loans. Their purchase power increases and the loan amount that they can take out actually increases. And the guidelines are actually very safe because VA loans have such a low default rate compared to any other loans. So whatever they're doing for their calculations, it works really well. Some other reasons: when you have a VA loan, you can actually cash out, refinance up to 100% compared to FHA and conventional loans, which are lower. They have the interest rate reduction refinance loan, which if you wanted to, refinance into a lower rate or do a cash out refinance, they actually don't make you pay for an appraisal, and the costs are much lower to do those refinances. Because as long as you are paying your loan on time, they don't really care about the value of the home, or they don't really care about how your income has changed really. As long as you show that you are paying that loan back in a timely manner and consistently, they'll let you get that interest rate reduction loan a lot easier than trying to refinance a conventional FHA loan. And it's also one of the best ways to start real estate investing, because since you have such high leverage of the 0% down, and you can get a property that will appreciate with the market, you can really leverage the amount of money that you have to put into the real estate market and help you in the long term. So here's a breakdown of FHA loan, a conventional loan, and a VA loan. All these loans are the exact same amount. It might be a little blurry, but they're each $300,000 purchase price, with the down payments for conventional at 5%, which is the least amount you can put down, FHA 3.5%, and then VA at the bottom, which is 0%. So as you can see, the VA loan actually has the lower monthly payment out of all three, and it also has the lowest interest rate at 3.25%. The FHA has 3.5%, and the conventional has 3.85%. Those are just rates that I'm kind of using. Those aren't like rates right now, but that's just a guesstimate of how it would be, and just some numbers put in there just to show you the differences. So the conventional loan starts off at the second highest because of the mortgage insurance that you're going to have to pay. Once you get the 20% of loan to value, that mortgage insurance does drop off. So the conventional loan will actually get less once you get to that 20%, which is why the total loan payment over the life of the loan is a little higher than the VA loan, and it's actually a lot lower than the FHA loan. The FHA loan obviously has the mortgage insurance premium for the life of the loan, so you're going to pay a lot more over the life of the loan compared to VA and conventional. But as for VA, you don't have any mortgage insurance. Even with 0% down, you're going to be paying a lot less over the life of the loan compared to the two other loan products there. All right, so VA loan eligibility. Again, veterans can qualify for VA loans, any active duty personnel, reserves and National Guard members, unremarried surviving spouses, spouses of prisoner of war, or missing in action service members. And some others may be eligible as well. So this is a little information about Reserve and National Guard. So members of the Reserve and National Guard who are not otherwise eligible for loan guarantee benefits are eligible upon completion of 6 years service in the Reserves or National Guard, unless released earlier due to a service-connected disability. The applicant must have received an honorable or a general or under honorable conditions is not qualifying discharge from service unless he or she is either in an inactive status awaiting final discharge or still serving in the Reserves or National Guard. So for myself, I served 7 years in the National Guard. So since I served 7 years, I can use the VA loan program. If I served 6 years and had 6 good years, I can use it as well. But if you served 5 years in the Reserves or National Guard and didn't have any active duty deployment or anything like that, you will not be able to use the VA loan benefits. And you can usually find this out by looking at the certificate of eligibility of each veteran, which I go into later in this PowerPoint. All right, so each VA loan, you get a entitlement. So VA entitlement refers to the amount of the Department of Veteran Affairs that is willing to insure the VA eligible veteran. The VA provides this backing to the lender to encourage lenders to make loans for veterans. If a veteran has a full entitlement, VA will guarantee 25% of the loan amount up to the county loan limit. A 25% guarantee is required. So that just lets lenders be insured a lot more. And it motivates lenders to give out VA loans to veterans. VA does not put a limit on how much a veteran can borrow, but they do put a limit on how much is guaranteed. All right, what is entitlement? So it's possible for a veteran to use their eligibility more than once. It is possible for a veteran to have more than one VA loan at a time if they have sufficient entitlement. And it may be possible to obtain a VA loan even if the veteran previously has a VA loan foreclosed on or participated in a short sale resulting in a loss to VA. So that's one thing that a lot of people think is that VA loans can only be used once. You have a certain amount of eligibility as a veteran, so you can actually use 2 VA loans at a time. So say you buy one property and not use all your entitlement, and then after a year you have to move. If you have more entitlement left, you can use that again to purchase your next property. So this is a certificate of eligibility that I was explaining earlier. This breaks down how much of the entitlement was used by the veteran and then how much is left. So as you can see underneath the chart, it says this veteran's basic entitlement is $13,500. So that's how much is left and how much he used before. The total entitlement charged to previous VA loans is $22,500. So he used $22,500 of its eligibility, and now he has $13,500 left. So technically, if he or she wanted to move after a year of living in their home, they could use the VA loan again, as long as they didn't go over that $13,500 entitlement. And there are calculations basically showing how much of a loan he can actually get using that entitlement. So this is a service connected disability form. It's on the certificate of eligibility as well. This will show if a veteran has any service connected disabilities. And a cool thing about having that, even though it's not a good thing to obviously have any type of injuries or anything from being in the military, but they do get additional benefits. So there's a VA loan funding fee when you do use the VA loan. And if you do have a disability of 10% or more, you get that whole fee waived. So I can save you a couple thousand more dollars on top of your VA loan benefit, which is an awesome thing for veterans. And then there's also many other ways to get that waived too. But it's good to have a loan officer that is specialized in VA loans to really dig deep and track and see if they can get that whole fee waived. It's beneficial to everybody. Here's a little bit about seller concessions. So the seller is allowed to pay for all of the veteran's standard closing costs, and it is not applied towards the 4% limit. So if the veteran buyer needed help with standard closing costs, they could ask the seller to pay for them. And then on top of that, they can also have the seller pay additional 4% as well. So the closing cost does not go towards the 4%. So here's a little list of things that the 4% can apply to. Payment of the buyer's funding fee. So sellers can actually pay for the whole VA funding fee if they would like. Payments of the buyer's property tax and insurance, gifts such as television sets or appliances, payment of extra discount points that are not considered bona fide. They can even pay off credit balances or judgments on behalf of the veteran. So there's a lot of options, and it gives really the veteran buyer, a better chance to purchase a home. Right now in this market, you're not going to be seeing a lot of this because it's a seller's market. So they're not really going to be trying to pay to sell their home. But when the market does ever have a downturn and it's harder to sell properties, this is a great leverage point for VA loan users and veterans. That is just an additional bonus. For VA appraisals, VA appraisers are thoroughly screened by the Veteran Administration and must have a minimum of 5 years experience in appraising residential properties. In addition, they must be able to demonstrate geographic competencies for the locations in which they are approved to conduct appraisals. So for VA appraisers, they're vetted they're vetted a lot, and they make sure that they are they have a lot of expertise in appraising, especially for the VA, which is good to know. Another cool bonus is that there's energy efficient mortgages that you can apply to your VA loan. This allows the veterans to include energy efficient improvements into the loan amount. There's usually a limit of $6,000, and the work is usually completed after closing. So say if there are repairs or things needed like a new HVAC system or anything along those lines that were maybe hindering the purchase of the property, the veteran could obtain this energy efficient mortgage and be able to close on the property, and they would have an escrow kind of hold back to fix those problems. And then once it's complete, the contractors would get paid, and then it would just be part of the total loan, the VA loan that the veteran borrower is using. All right, so this is a little in-depth about residual income. So this will explain kind of how much is needed depending on your situation. This depends on the amount of the loan, the size of your household, and the location of the property. So here I just have a couple things circled. I'm just using the Northeast where we are, and I'm using Rhode Island. So say you're in the Northeast and you live in Rhode Island and you're trying to buy a property in Rhode Island. And you have a family size of 4 people, including yourself. So you're going to need a residual income for loans amounts above $80,000 or higher. You're going to need a residual income after all the expenses of the mortgage, expenses of any debt that you have, utilities. They take in the nitty gritty of everything within the household too. So you're going to need to have a residual income of $1,025 after all of those deductions left over. And if you do have that amount, then you would qualify for the VA loan of whatever amount you're trying to get. So if the residual income is not met, loans cannot be approved if the veteran does not meet the residual income requirement. Ways to increase your residual income is to consider a lower loan amount, look at ways to reduce monthly obligations. So this can be debt consolidation or something like that. Utilize seller concessions to pay off debts. So this could be like that 4% seller concession that I explained earlier. You can have the seller actually pay down some of your debts to increase your residual income. If there's a spouse who is not on a loan and we can document that they contribute to the household income, then we may be able to reduce household size by 1, which would decrease the residual income requirement size. So that is saying basically, if you are a veteran buying a property with just yourself on the loan, but you had a wife or a husband that wasn't going to be on the loan, if we can prove that the wife or husband has a significant amount of household income that they contribute as well, we can actually decrease the, let's go back to this slide. We could decrease the family size by 1. So we could move that up to 3 because it's basically saying that the husband or wife is kind of self-sufficient and they contribute to themselves, that they're not dependent of you. So then that would bring it up to say $909 rather than $1,025, which is just other ways to help lower the residual income, which can help borrowers qualify for even more. Here's another additional benefit too. Some veterans can get property tax exemptions. So I was talking about the disability, if a veteran has disability payments from the VA. If they have a certain amount, depending on the town that you live in, they can call that town and see if they qualify for property tax exemption. So they can actually not even pay any, up to like no property tax on their properties, which is an awesome benefit for veterans as well. And it's something that a lot of loan officers and even some realtors don't really know about. So I like to share this, and this is a link also that you can go see more information about that. All right, so here are my contact details. This is my email and then my cell phone as well. If you have any questions, reach out to me anytime. And awesome.